Good morning, ladies and gentlemen. In the words of the late great Robert Frost, we stand at multiple pathways diverged in the wood. And with different pathways consulting, taking the path least traveled will make all the difference. With Spruceland, we identified three key pillars of strength. The first being the locally grown investments, the second being the diverse range of businesses, and the third and most important, the high community involvement and focus. Now, with Spruceland, we identified the problem that there are likely an identity crisis in the midst of an oil and gas downturn. Now, how do we move forward, keep the community involved, and most importantly, how do we figure out who we are while realizing our vision?
So, in order to help best select our pathway forward, we did a variety of analysis. So if we look here, we can see that our strengths include the large amount of liquid assets we have available, as well as that community involvement that has helped us so much in the past. We do have the weakness of the oil and gas industry losing its value, however, but there is an opportunity in the real estate market as interest rates are at an all-time low. That means it's a buyer's market, which we're perfectly poised to leverage. Additionally, we do have the youth population as an advantage as well. Now, with threats, the oil and gas industry is leaving the area, and we do have a declining indigenous and youth population. Now, if we look politically, we can see that the recent provincial government has increased the amount of new business loans available. Also, economically, the real estate market, as mentioned, is in a very good position for a buyer. Now, socially, that community involvement is what's helped us so much in the past, and is going to continue to help us moving forwards. Technologically, there's not too much in the real estate market, but there are perhaps a few available assets for the new path we pick. Looking at our 5 forces, the most important one is customers. Without that strong customer buy-in, whatever path we select is just going to ultimately be a waste of time and money.
We also highlighted a couple growth rates for you as well too. Taking a look at a few highlights right here, you can see year-over-year change, everything is in actually quite the positive. Lowest number is actually your highest one, your revenue. Revenue, you're currently standing about $10 million a year. It's very stable, but we want to increase that. We want to get to a 15% with your revenue. Most of your other numbers here are pretty positive moving forward year over year. We also highlighted a couple ratios for you as well too. We have your debt ratio, current ratio, and your debt to equity. As you can see, compared to industry standard, these are pretty good, but I'm just not here to tell you how good a job you're doing. We also picked out a couple key success factors here as well too for you. Workforce, you have it. Finance, you have that as well too. And of course, your physical assets, you already have that. How do you use what you already have to move forward and succeed in your long-term goals?
Now, in identifying a solution, we used a 3-tier criteria. The first being community involvement, the second being our workforce involvement, and the third, the stable local economic cycles. Now, we identified 3 solutions for our identity crisis. The first was to sell off our stocks and assets. While we would realize an immediate profit, we would not gain our full value of the stock and assets achieved. On the other hand, it would increase cash flow into the community. Our second would be to change the entire organizational structure into a publicly listed trading company. Not only would it increase inbound capital and share prices, but it would realize that profit is possible before community. However, the downside would be non-community shareholders could become the board of directors. And third, we would say expand into commercial and retail real estate. Not only would it increase overall revenue and see a gain in stock price, resource companies would have a more convenient operational head office, and then we would create different job requirements for the local workforce that's hungry.
So let's return to our decision criteria as we figure out which path is best. So, as we look at our first option, selling off the stocks, we can see the community involvement will be there as we are realizing some of that value for the shareholders. However, workforce involvement is not there as we're no longer employing those people. Additionally, we don't gain access to those stable economic cycles as we're no longer functioning as a company. If we look at public trading, our community involvement is going to be lower due to that increased influence of outside shareholders. Workforce involvement will be there as we continue to employ the people, but we probably won't gain access to those stable local economic cycles, and we'll still be tied to the volatile oil and gas cycles. Now, our third option, community real estate, there's where things get good. So if we look at our community involvement, we can see that the community involvement is going to be very high as we continue to invest in and grow the local community. The workforce will continue to be involved as we continue to employ them and provide job opportunities, not only for the skilled trades workers who are currently unemployed, but also for the undereducated populace as well. We do gain access to those stable local economic cycles by diversifying away from those more volatile oil and gas cycles. So that's why we're recommending that we pick the third path, community real estate. To do so, we're going to continue to build more offices for the northern regions so we can shift those operational headquarters out of Calgary and Edmonton and up into the north. We're going to expand into different retail models, such as strip malls, where we can get a combination of local business and outside business, leasing that space from us and increasing our revenue. Both of these points are going to create all levels of involvement for the workforce. Those skilled tradespeople who are currently unemployed, they're going to be employed in the development of new real estate. We're also going to be providing entry-level jobs for those currently unemployed and undereducated populace as well. Now, the goal of this is to focus on the long term. We want to build a hub in the north and get those shares out of the hands of the estate planners who are retiring and into the hands of those young youth and indigenous population. We want to make those dividends higher.
Of course, with this path, there are a couple risks we'd like to mitigate as well too. With this path, there is a different workload for the resource miners initially. So they go from working full-time to currently they're not working as much, and now they have different workloads that they're going to have to take on, building all the real estate in the community. With different offices moving in, there is going to be a higher outside corporate influence within the community. So with that being said, there's a possibility of a diluted community ownership. You might lose track of the original vision, but you get a more different flavor within the community as well. We do have an updated Pillars of Strength for you too. With your new Pillars of Strength, you actually are seeing the community involved as shareholders with the new path. New businesses, again, do move in, both retail and operational, giving you a different, again, flavor within the community. And with the local workforce, there will be more leadership and consulting positions available. Implementation, we're estimating to take about 9 to about 12 months for the actual infrastructure to get built. We're going to expand the current office space, as well as build more retail operational as well too. We're going to use the cash flow to build more retail space, including using your liquid assets you already have available. Once that's all finished, we'd love to see you build a community center for local residents while still realizing our profit. Give back to the community that gave so much to you. Do you have any questions?
I guess I have a few questions, yeah. So building offices, expand into retail, so in that type of business, you build for tenants if you're in commercial real estate. So to build offices or build retail, you need demand for that space. Whereas in Slave Lake and Northern Alberta, generally, with the slowdown in the oil patch, there was less demand. There's already vacancy. So there really wouldn't be, I don't think, an opportunity to build new space and lease it up at an economic rent. It's a supply and demand.
Great question. The way Different Pathways sees it is we looked at the 100-kilometer radius around Slave Lake and realized that a lot of these residents drive far distances to Edmonton or Grand Prairie for their retail or their commercial services. So with the influx of the money back into the community, creating income for these out-of-work workers that their families need, we believe it creates that demand to have these businesses come in. Because unfortunately, they don't have the ability to have Amazon one-day delivery or the mall down on the corner. So instead of them driving that 3 hours, they just drive into Slave Lake, which is close, creating a demand for that retail.
Another question I have. Do you have a question?
Yeah. So I think, Jonathan, you had said that we want to get the shares out of the hands of estate planners, and I'm just wondering, how do you envision those shareholders being able to sell their shares? Like, at what price do you think they're going to be able to sell their shares for?
Right, it's a great question. So we're hoping as the revenue increases that they will be able to sell their shares for a little bit more. However, real estate markets traditionally have a bit of a gap between the share price and the asset value due to the illiquidity of the properties themselves. So it's likely that we're not going to be able to close that gap fully, possibly ever. What we want to do is we want to, through that increased revenue, maybe let them sell it at a little bit more, get a little bit more value for their shares, and get it into the hands of the youth population. Additionally, due to the very unique model of this company, we're not on a publicly traded stock board, stock price is a little bit more complicated than simply evaluating it and setting a price. The stock price depends a lot on how much other people in the area are willing to pay for it. If nobody's willing to pay a higher price for the stock, then it just isn't worth it.
The key success factor is workforce, how so?
Well, the workforce is already there. So the nice part is you already have employees working for you. It's really easy, not really easy, but it's a nice transition to take them from mining up north to helping build the actual infrastructure there. So that is one of the big factors with the key success factors to make this plan work, is utilizing the local resource workers.
So I think a lot of the smaller towns in the North region would love to be a hub for oil and gas and love to have those head offices and everything, but we see those all congregated in Calgary. So what's different about your plan that's going to attract that head office and investment?
Perfect. We're not focusing on the head offices. We realize corporate head offices, they like their steaks, they like their martinis. They're not going to move from Calgary. We're focused on the operational headquarters. So the guys in the trenches, instead of driving that 4 hours, renting that car, having the kilometers put on, we're reducing that cost by having a low-cost infrastructure built there for them. So they're actually there in the trenches, instead of coming from Calgary and Edmonton on a regular basis. So instead of having a video conference call, it's as simple as I'll be out in 15 minutes. We'll talk about it. We'll look at it. So that's what we're hoping to do with this new solution, is bring that operational headquarters, not the corporate headquarters, to that northern hub. So we're involved in that community.
Judges, we will take one final question at this time.
So, so in the end, this plan would result in a higher share price for the shareholders? Is that the purpose of the plan?
Yes, right now they're trading at $22. We realize that they started at $1. With these estate planners, they're focused on the short term. We want to focus on the long term with that 9 to 12 implementation, 9 to 12 months, pardon me. We're trying to realize a greater stock price, but like John alluded to, if it's too great, the youth and Indigenous population in the area would not be able to purchase them. We're focused on the dividends for their families, their children's children. We're in a long-term game. So already realizing that $11 million in dividends from 1969 to 2016, we hope to continue that trend for the youth. And if you invest in your youth and your community, you invest in your future. If we short-sight it and go for the higher stock price and bail out, we're not actually helping our community overall. We're helping those estate planners, which is all well and great, but we want to focus on the long-term gain in that youth. So like I said, I'll go back to it, if we get too high of a stock price, we will not be able to keep the community involved, because I'll bring myself into example. I can't afford a $45 stock price. I can afford a $25 stock price and see those dividends increase year over year with the investment in those capital projects.